All right, let's dive in. Today, we're going to try and decode what's next for the U.S. housing market. We'll be looking at what the top economists are actually forecasting for 2026.
So have you been thinking about buying or selling a home? Maybe you've been sitting on the sidelines, just waiting, wondering, when is the right time to jump in? Well, if that's you, you're in the right place, because the next couple of years could really change the whole game.
I mean, let's be real. The last few years in real estate have felt like a total roller coaster, haven't they? We've seen these wild price swings, interest rates just shooting through the roof. It's been pretty tough out there. But the word from top economists is that a pretty big change is coming.
In this quote right here, from the National Association of REALTORS, really sets the tone for everything we're going to talk about. The key words are rebalance and rebound. So we're not talking about some crazy crash or a massive boom. It's more about the market finding its footing again, moving towards something that feels, well, a little more normal, a rebalance.
Okay, so what does a rebalance and rebound actually mean for you? Let's break it all down. We're going to look at 4 key things: how many homes are being sold, affordability, what the inventory looks like, and, maybe most interesting, who's actually out there buying these days.
All right, first up, the simple act of buying and selling a home. For what feels like forever, the market's been kind of stuck in this deep freeze, right? But the data suggests it's finally starting to thaw out.
You probably remember hearing about the lock-in effect, right? That's where you had all these homeowners sitting on these amazing 3% mortgage rates, and they just felt, well, trapped. They didn't want to sell and have to get a new mortgage at 7%. But according to Lawrence Young, NAR's chief economist, that's starting to fade. You know, life just happens. People get new jobs, families grow, and more people are realizing it's time to move. And that's what gets the wheels of the market turning again.
And check this out. This is the big headline number that comes from that thaw. Economists are actually predicting a 14% jump in home sales across the country in 2026. I mean, after the super sluggish market we've seen, that is a really big deal.
Now this part is where it really hits home, right in your wallet. For the first time in what feels like ages, wage growth is expected to actually grow faster than both home prices and general inflation. So what does that mean? It means your purchasing power, your actual ability to buy stuff, should go up, and that could make buying a home just a little bit more possible.
And you know, that idea of more purchasing power leads us right into our next big topic, affordability. This has been the #1 hurdle for buyers, for sure. But there's actually some good news on the horizon.
I mean, we all lived through this, right? We watched mortgage rates skyrocket from around 3% all the way up past 7%. That added, what, over $1,000 to the typical monthly payment? It was a brutal shock to the system. But the forecast now is for rates to kind of settle down closer to that 6% mark. And believe me, that makes a huge difference.
And this is just that fantastic way to understand the impact of that drop. A single percentage point might not sound like much, but it's like a key that unlocks the door to the housing market for millions of people. Senior economist Nadia Evangelou points out that this could mean something like 1.6 million renters could finally become first-time homebuyers. That's a game changer.
Okay, so let's put the pieces together. You take slightly lower mortgage rates, you combine them with more moderate home price growth, and what do you get? You get something we honestly haven't seen in years. The typical monthly mortgage payment is expected to actually go down. That is the big reversal we've all been hoping for.
All right, so it's getting a bit more affordable, which is great. But the next question is, what's even out there to buy? And that brings us to our third big topic, inventory.
Well, the simple answer is there's just more to choose from. Inventory levels are up by about 20% compared to a year ago. For buyers, this is huge. It means you have more options and maybe, just maybe, a little less of that crazy pressure to make a decision in 5 minutes flat during a bidding war. But here's where things get kind of weird. There's a twist. Right now, in a lot of places, the median price for a brand spanking new home is actually lower than the median price for an existing older home. That almost never, ever happens. So you gotta ask, why is this happening? Well, according to Robert Dietz from the National Association of Home Builders, it's basically a perfect storm. You've got builders offering all sorts of incentives to sell their new homes, plus a ton of that new construction is happening in more affordable parts of the country. Both of those things are pulling that median price down. Okay, but before we get too excited about more inventory, we have to look at the bigger picture here. Pretty much all the experts agree that the U.S. is still facing a structural housing deficit. In plain English, that just means we haven't built enough homes over the last decade to keep up with all the people. So yeah, things are getting better, but that long-term challenge with affordability, it's not just disappearing. So, we've talked about the numbers, the economic forces, but now let's talk about the people. Who are the actual market makers out there? Who's doing the buying and selling in 2026?
This is so interesting when you look at the breakdown. On one hand, you've got baby boomers who are really the dominant force right now. They often have tons of equity built up in their homes, which lets them make those tempting all-cash offers. But then you've got these other really important groups, single women, who are a consistently growing slice of the pie, and first-time buyers. They've been on the sidelines for so long, but it looks like they're finally starting to get back in the game.
And this really gets to the heart of the market's main tension right now. It's this constant push and pull. You have first-time buyers who absolutely need a mortgage, so they're super sensitive to interest rates, and they're competing against all-cash buyers, often the boomers we just talked about, who can just skip that whole financing headache. That fundamental tension is what decides who wins a lot of these deals.
Whew. Okay, we've covered a ton of ground. So let's wrap this all up. Let's put it together into a simple playbook for what you can expect in 2026.
So here are the 4 big takeaways to remember. Number 1, more choices for buyers, all thanks to more inventory. Number 2, monthly payments should get a little easier to handle as rates and prices chill out. Number 3, get ready for a much more balanced market. Think actual negotiation, not just all-out bidding wars. And finally, number 4, expect moderate price growth, something that's actually sustainable.
So when you add it all up, the data really points to a market that's finally finding its feet again. It's becoming more predictable, more balanced, and, just a little more accessible. It really is a shift from chaos to something a bit calmer. So the big question is, with the market rebalancing, are you ready to make your move?